This podcast aligns with several intuition know-how tutorials. Every day, the world's top financial institutions rely on intuition know-how to deepen their expertise in both foundational and emerging subjects, from AI and sustainable finance to fintech, regulation, and core banking concepts. Search Intuition Know-how to learn more. The recent high-profile launch of tokenized money market funds in the U.S., following the passage of landmark legislation, marks a significant step in bringing blockchain-based finance into the regulatory mainstream, shifting attention away from crypto speculation and toward more institutional, low-risk use cases. In a high-profile collaboration, BNY Mellon and Goldman Sachs have launched the first U.S.-based tokenized money market funds. This development comes on the heels of the Generating Equity and New Interest for Unsung Small Businesses, or GENIUS Act, a landmark piece of legislation passed in July that establishes the first U.S. federal framework for stablecoins. How does the Goldman and BNY Mellon collaboration advance tokenized money market funds? Goldman Sachs' collaboration with BNY Mellon to pilot a tokenized money market fund connects Goldman's digital asset platform with BNY's custody infrastructure. Building on earlier efforts, including Goldman's digital asset platform's role in a 2022 European Investment Bank bond issuance. This pilot allows tokenized fund shares to be used as collateral on a distributed ledger, potentially streamlining margin calls and settlement. While the scope is still limited, the collaboration shows how tokenization could improve collateral mobility, an issue that matters both in traditional repo markets and in the evolving ecosystem of permissioned blockchains. The timing is notable. Institutional interest in tokenized funds has been rising, and by passing the GENIUS Act, the U.S. Congress is facilitating exactly this kind of innovation. How does the GENIUS Act open the door to tokenization? Tokenization of traditional financial assets isn't new. Franklin Templeton and BlackRock were early movers, with tokenized money market funds launched in 2023 and 2024, respectively. But the GENIUS Act crucially provides regulatory legitimacy to this trend. Though primarily aimed at improving small business financing, the bill clarifies the treatment of tokenized funds and stablecoins, encouraging digital assets that align with traditional finance and U.S. policy goals. To this end, the bill places new restrictions on stablecoins, including a 100% reserve backing requirement with cash or short-dated treasuries, monthly disclosure requirements, and, most significantly, a ban on interest-bearing stablecoins. By incentivizing capital flows away from crypto-native tokens and toward regulated tokenized funds that can offer yield within a compliant framework, these limits on stablecoins aim to bolster demand further for risk-free U.S. assets, while preserving the dollar's supremacy in global finance. What is tokenization and what are its benefits? In simple terms, tokenization refers to the process of creating a digital representation of a real-world or traditional financial asset, in this case, money market fund shares, on a blockchain ledger. This digital mirror enables more seamless tracking, settlement, and potential transfer of ownership, without changing the underlying asset structure. Key benefits when it comes to tokenizing traditional financial assets include enhanced liquidity and more efficient utilization of collateral. In a conventional money market fund, redemptions can take up to 2 business days. Tokenized money market funds, however, enable instant settlement, which could eventually support real-time treasury and collateral operations. According to Goldman Sachs, the blockchain-based system could allow tokenized money market fund shares to be used more efficiently as collateral in financial transactions, without the need to liquidate the underlying asset. Instead of selling MMF shares to raise cash for margin or lending purposes, token holders may be able to transfer or pledge tokens directly in future collateral arrangements. Why does institutional appetite for blockchain-based funds keep growing? These developments are likely to boost already fast-growing institutional demand for tokenized money market funds. Demand is coming not just from hedge funds, pension plans, and other asset managers seeking secure, short-duration, yield-generating instruments that can integrate with blockchain infrastructure, but also from custodians and other service providers aiming to modernize settlement and collateral management. More broadly, the move reflects a quiet shift in digital asset strategy, away from crypto's speculative excesses and toward tokenizing real-world financial assets in pursuit of efficiency, transparency, and liquidity. How are TradFi and crypto becoming more intertwined than ever? The launch of tokenized money market funds marks another step in the slow but steady convergence of blockchain infrastructure and traditional finance. Rather than displacing established institutions, tokenization is being folded into them, quietly reshaping how liquidity, collateral, and financial instruments move through the system. As tokenized financial products gain traction, the boundary between crypto and conventional markets continues to blur. This growing interdependence brings efficiencies, but also potential risks. If blockchain-based assets become embedded in core financial operations, their vulnerabilities could spill over into the broader system. For now, however, the trend is clear. Tokenization is moving beyond proof of concept to becoming part of the operational backbone of mainstream finance. Thank you for listening to this podcast from the Intuition Finance Digest. If you would like to continue furthering your financial knowledge, visit our resources section at intuition.com.